Eric, why are Hong Kong's working class continuing to struggle in this economic recovery?
Yeah, it's really interesting. We've seen the Hong Kong economy emerge from its two-year recession in the first half of this year. But what's become apparent is that it's a bit of a two-speed recovery, very uneven. We've seen a very resilient financial services industry still in the city, with real estate prices, property prices still the highest in the world, still the most expensive property market in the world. But tourism, retail, accommodation, food services, those key industries are still very weak. If you think about it, it makes a lot of sense. The financial system can operate virtually, but tourism, restaurants can't really. So what we've seen is this has really hit the working class and the city's low-income households particularly difficult because that's really where much of the workforce comes from for those key industries.
So what are we seeing from the government to try and address this, and is it working?
Yeah, the government has instituted various measures over the last 2 years to address the pandemic and the protests before. We had a $10,000 Hong Kong cash handout last year. We're getting a $5,000 voucher system this year as well. But economists are calling for more long-term measures, things like work retraining, helping people to transition to this shifting economy. And that's really where the issue is that Hong Kong's economy coming out of this recession, coming out of the pandemic, has lasting changes. And we're not exactly sure where that's going to go. So the government needs to be a little more proactive, according to economists, in addressing those changes.